Hi, I'm Dr. Kevin Milo, and you're listening to the Physician Empowerment Podcast. At Physician Empowerment, we're focused on transforming the lives of Canadian physicians through education and finance, practice transformation, wellness, and leadership. After you've listened to today's episode, I encourage you to visit us at phys-empowerment.ca, that's PHYS, empowerment.ca, to learn more about the many resources we have to help you make that change in your own life, practice, and personal finances. Now on to today's episode. Hi, everybody. Very glad to be on tonight's webinar. And I think it's been a while for me since I've been here, getting busy with life and family and everything else. But tonight's topic is one that's very near and dear to my heart, and that is real estate investing as a physician or a busy medical professional, because there's a lot of complexity to truly thriving in this space. I think it's easy enough to be an investor, but to truly thrive as one, which goes far beyond simple returns, there's a lot of complexity here. So joining me is Wing. And tonight, Wing, why don't we just go back and forth and do a bit of like a Q&A? I know we've got some questions prepared on how to be truly, truly successful in this space.
Right. Hello, everyone. So this is one of the few times that Kevin and I actually go co-host and talk back and forth, right? This is kind of a little bit of deja vu. So yes, real estate. So I think I named it white coat versus real estate. And it is a bit of a mystery for some people. They felt they're really, really good at it. Some they struggle, some they are agnostic, right? So we have a few questions. Yeah, so Kevin and I just want to go back and forth. So I'm going to ask you first, Kevin. So what do you think when an average Canadian medical professional, you broach them with the idea of real estate investing, what would be the average doc's response be?
Yeah, I think we can all see what's out there on social media, the conversations we have in our workplaces about real estate investing. And I think for a lot of Canadian physicians, there's certainly an appeal to the idea of real estate investing. People want to be in this space. The issue is when it actually, like, number one, how do you get started? I think is one thing that sort of comes up. And then, how do you do it, right? Is this something, are you buying personally? Is it direct ownership? Is it limited partnerships? There's a myriad of questions. And there's this added complexity of being an incorporated professional. So that's kind of my own take. I think a lot of people that look at it and go, yeah, I would like some exposure to real estate. I just don't know how.
Right. So I would say there are two camps, right? There are camps that are just totally, no, I don't touch real estate other than my own residence, right? I'll say a lot of medical professionals have millions of dollars in holdings in real estate, but it's their multi-million-dollar house, their cabin, timeshare, all those, right? None of those are really making money for them, right? And then, so a lot of people are really adverse to that. Like, I'll find it was really difficult, really far away. Or some of those that are actually double, right? They actually do it. They own a rental, maybe started, their rental the basement, right? Kind of a DIY, right? I think all of us kind of start somewhere there. And that's fewer of them, and extremely few actually do it well, right? Or do it in a bigger scale, right? So I think that's kind of it. And then insurance people, I've met financial planners say, hey, yeah, you doctors are over-invested in real estate. I said, really? I find that most of my colleagues are under-invested in real estate, right? And there's always, like you say, there's this appeal, right? Because when you look at the top 1% people, right? We had a retreat just about all the top 1%. Nobody gets huge without any real estate holdings, right? So I think people kind of know that, right? But it is hard to just jump into it. So next question, what are some of the advantages of this asset class?
Yeah, I again, we sort of touched on that. I mean, to follow up on your earlier point, I mean, when you look at institutional investors, pension funds, family offices, these large scale operations, a lot of them have exposure to real estate in some capacity. So yeah, I think people are looking to gain some exposure to it. I mean, it depends. I mean, advantages, I think you can break down in a myriad of different ways. I mean, you could look at real estate as for its safety. You can look at it for its, income, if it's an income generating asset or capital appreciation. But then there's a whole tax side to it, right? And maximizing some of the advantages we have within incorporation in order to optimize our tax situation, right? So there's a lot of like things that fall into the advantage category. I mean, you break them down better than I do, Wing, but like I think those would be some starting points. Would be like, okay, real estate's great. You know, you can read a book on it, you can find a YouTuber, anybody will talk about how great real estate is, but there's the whole tax planning side that I think is underappreciated.
Right, exactly. So there's a lot of, and again, we can dive in it, but it's not the scope of this webinar, but there are a lot of tax advantages. There's also leverage advantage, right? You can leverage the growth. It's hard to leverage something to buy mutual funds, right? You know, leverage mutual funds to buy something else, but real estate, you can get prime minus interest and you leverage 3, 4, 5 times and it grows over time. And when I first learned about real estate, they talk about it's like a 3-course meal, right? There's the dessert, there is the there is the appetizer, the meal, and the dessert, right? And the meat, the main dish is actually other people paying down your mortgage over 25, 30 years, right? And then it's fair and clear yours, right?
Yeah. So for anybody that's listening and this is all new, it's as simple as you provide a down payment on a real estate asset you hope to acquire, let's say a small apartment building, you put tenants in, the tenants are paying off the mortgage and, you know, holding on to the asset until the mortgage is paid over the amortization. You're then the freehold owner of that asset. And along the way, it was borrowed money plus the tenants that allowed you to acquire the asset. But that's a long road and there are, you know, it's pitfalls for sure.
There are other ways, right? So, and again, in a couple of weeks, we're going to, in a masterclass, we're going to talk about real estate pathways, right? There are different ways to skin the cat, so to speak. Like Kevin, you just said that drawbacks. Okay, well, there's always the pros and cons. What are some of the cons that we experience?
Yeah. So again, super broadly, right? The con, right? So the cons are, again, you can find these resources online. You can find YouTubers that'll complain about real estate or read books about it. But one of the downsides is certainly a degree of risk associated with real estate, right? Like when you're going that traditional route of do it yourself, or what I'd say is an entry level route of do it yourself, you're ultimately responsible for mortgages, lines of credit, or anything else you borrow in order to acquire the asset. And so some physicians are uncomfortable with that. I think we deal with enough risk in our day jobs, constantly triaging and risk stratifying patients, that maybe we don't need more risk in our personal lives, or maybe risk has to be very, very manageable. The other one is that it can tie up a lot of capital, right? So if you're putting, you know, lots of money into these things, you know, it's your money sitting there, and there can be a long, depending on what type of you know, real estate investment you've participated in, there can be delays in getting that capital back, which is another time and money factor to consider. Would be the other big one I see on that philosophical kind of level is the speed of money. And then I don't know, Wing, like the probably the big ones, you know, reflecting on my own journey as a real estate investor and my own struggles and talking to other people that struggle, is like the time that you really need to build. Like if you're investing in real estate, you really need to do it in a way that is not going to suck all of your time and life energy out of you. You don't want a portfolio with so many doors that it just feels like you're working a second job. And I've met people who do that for a living. I mean, we you know, had a guy in our network. He was not a doctor. He was a self-made real estate investor, and he had 3 apartment buildings. And he said his life is basically answering calls in the middle of the night, that every single day there's something going on. So like you just, yeah. So there's again, you can look at it from these very high levels and see some of the very real challenges in real estate. And so the key is, and this comes back to the topic that as we introduced it today, is it's not only about the returns, it's about truly thriving. And I think this is the big turnoff for a lot of physicians when they are working their 60, 70 hours a week or more. They're already burdened with paperwork. They really don't need more, right? And I think that's one of the reasons why people are turned off of do it yourself or direct ownership but there are other better ways. I don't know. Why don't you go through all the drawbacks? Because again, you know these more than me.
Well, again, this is not going to be a lecture, but I think part of that, when we talk about risk, well put, right, Kevin? That there's always risk in real estate. There's always risk elsewhere too, but elsewhere the risk is masked or is triage because you pay somebody else to deal with the public markets for you, right? Or you can get in and out quickly if you do your app on some app and buy stocks and throw stock or crypto, whatever, right? It's fast in and out. But real estate, you cannot just go in and out, right? It's illiquid. The time aspect, right? It's very illiquid. If you make a wrong decision, you cannot just say sell it next month, right? You might, but you may not. You may be sitting there for 5 years, right? So there's always that time factor, right? And the risk factor, right? And like I say, the brain space, how much it takes. You want to be on call. I'm already on call 1-on-1 for all my seniors. I don't need any more emergency for plumbing, right? So
Yeah,
yeah.
exactly. There are limits to how much any of us can do.
Now we're getting right in the thick of it. How do we each start, and what's our experience? So, Kevin, you got some juicy stories?
Oh, I mean, I've got lots of like war stories and resulting scars of doing this, and I should say, like, I'm not here to speak negatively about real estate or anything like that. We just want to bring you a very real experience, right? And this is drawn not only on our own personal experiences, but talking to many, many doctors across the country who've had their own experiences with this, right? Because I think that's the focus of this podcast, is us as busy physicians, not just somebody who, hey, you know what, they happen to love it. They love landlording, they love being in control, they do it full time. We're not talking about them, right? We're talking about us as very real working physicians with families, practices, and a whole bunch of obligations on our time. So
So
for
how
me,
did you cut your teeth, and what's your initial experience?
yeah, so my very first experience was buying a house. Our family bought a house in medical school.
Okay.
Big mistake. And then bought when the market was really hot in Edmonton,
Mm-hmm.
and then couldn't sell. But there were moves, career related moves. And what do you do with the place? You don't want to sell it at a loss. So we rented it.
Mm-hmm.
And, there were ups and downs on a single family home, which, we still have. And overall, I've been actually very happy with that little place, but it was certainly more work than I was expecting. And yeah, like the landlording experience was unique, right? Certainly managing properties yourself, like you get some tenants that are great and take great care of the place, and other tenants that struggle, and it just becomes another worry for you, right?
Now you have this lumbar puncture night. You got to share
Oh,
this.
lumbar puncture night. Yeah, that was a classic on Yat and Chada's podcast. I think that was the first time I was on his podcast. But yeah, I was working a string of night shifts in the emergency department. I finished my last night shift. I was on my way to take a flight. I was, preparing to go straight from the hospital to the airport, hop a flight, wrapping up. And this is actually in a condominium, like a building that I bought a few units in, and it was a brand new build,
Mm-hmm.
right? And I get a call from the tenant being like, "Oh, there's water coming in from the ceiling," and I'm like, "What?" Right? And I knew there was hardwood in that place, all brand new finishes. Ah, and yeah, so of course, how could I hop on the flight without at least going and looking at the place? Thank God the damage wasn't that bad. It was very easy fix, but it was just like that little heart stoppage there, those little palpitations that you get.
So how many lumbar puncture did you do that night?
Yeah, that was the crazy lumbar puncture night. Ray, I'm getting ahead of myself. The shift was horribly busy. I think I did like 4 lumbar punctures. I
Oh
can go a
boy.
long time without doing a lumbar puncture, but I tend to practice as like, okay, these are independent events. So if this
Right.
one had a bad headache, they get a lumbar puncture. That one had a bad headache, and anyhow, it was 4 of them. It was lumbar puncture night.
Oh
Got
gosh.
them all, and then yes, there was kind of a lumbar puncture in the water line in the condo above us. So that leaked as well. I don't know. That's a bad joke, but yeah. Anyhow, yeah. Thank you for reminding me. So
No, it's real story. They say trauma given time is humor.
yeah,
So
yeah. And so the lesson, like for me on that, was these things happen at the worst times, right? And whether that's, if you're talking about direct ownership, it's like tenant moves out at a time. I can't deal with a turnover, right?
Right.
Or, it's you get a costly repair bill or whatever have you. And these things are not just the money that was an unexpected expense, but the time.
Mhm.
And I think that's the one I probably struggle with the most.
Right. So I can share my story.
Yeah, sure. You've got lots of good war stories as well.
In my residency days, okay, so unlike you, I did not buy anything. I was talked into managing, and I have no experience, no desire. So my sister-in-law was a realtor at that time, and then she talked my parents into owning a bunch of condos, and my mother-in-law to get some other condos. So then everybody left. Everybody left.
Oh, everyone back to Hong Kong.
Yeah, Hong Kong or wherever, right? And then
Yeah.
so Kitty and me, we were fiance
I
is
don't
just
think I heard
married.
this one.
I was doing 120 hours a week. We're stuck in these properties,
I don't think I've heard this.
right? And we don't know what to do, so we hire off whatever property management. So I still remember a condo way back in the 90s was 80,000 per condo, and the rent was $660 per month. And after property management is done with their whatever repair and that, we got $200 per unit. We couldn't even pay the mortgage. So it was in each unit was in negative cash flow. And this carried on until we dumped everything and we I got so scarred for the next 17 years. I never touched real estate. And that's why I tell people I'm actually a very late boomer.
Yeah. So exactly. And I think that is actually quite a common experience for lots of physician investors in the real estate space is you've gone through a rough patch, you've been burned, and you're like, nope. Whether it was a giant time suck or a money suck or just, frustrating in some way, this was it for a lot of people are stories like this.
Right now, before we scare everybody away. So what are some of the wins, some of the rewards, positive rewards, some of the good points? Can you share a little bit and then I'll share a little bit?
Yeah. So, I mean, it sort of depends on different ways to invest. And I know like we've, each invested in different ways in real estate. And that will be something we actually teach in the masterclass in detail, like, limited partnerships, debt, financing, direct to ownership. There are lots of different ways to participate in real estate. But certainly like for me, I've been really happy when the markets took a turn upward and you went, wow, I got to ride that wave. And real estate can be very powerful. Like if you're invested, and it could be through direct ownership or as an equity partner or whatever, but you put money in different properties or different projects. And then like the market goes for an upswing and you participated in multiple projects, then everything went up. And then you get a big lift in your net worth. And you go, wow, like I don't think I would have gotten that from a nice turn on the stock market. And I certainly couldn't work that hard to make that kind of money. And I didn't have to do much for it. So yeah, like we look back and we have a lot of the hardships and the frustrations, but then we forget like, well, how much of the mortgage got paid off by somebody else? Or how much did that property appreciate in value? Or some of the tax advantages, which we just don't have time to go into a lot of the tax advantages of being a real estate investor, but there are a lot of them. We could have entire lectures on that side to it. So those are kind of I would probably say the very tangible things. And I think when I give this lecture in our conferences, I talk about holding the road, right? Like let the numbers hold you to the road. So look at, how much you paid down in mortgage, look at how much, a project is appreciated, whether you're participating as the owner or a limited partner or something along those lines. You can really see some very tangible returns. So I don't know, what are your thoughts or what holds you to the road, Wing?
Yeah, so I think I've been fortunate enough to participate in different kinds of real estate ownership. I've learned a ton. I have a lot of battle scar, but there are a lot of lessons learned. And once the lesson learned is yours, right? And I think those are the most important intangibles, right? You learn lesson is yours, right? A big or small project. So once you learn it, it's part of you. yes, what you said, I totally echo, right? When the wave goes high, right? And when there's a cycle, right? Like there's bull market, there's bear market in every market, right? Stocks, crypto, you name it, right? Commodities and also real estate. Just real estate is much slower. When you ride on it, you really ride on it for years. Unlike crypto or stocks, right? Tech stocks go up and down, crash 2 days ago, you're wealthy, 2 days later, you're broke, right? Like you got to really watch, right? Really
And
watch.
it's a mindset. It's a market mindset you
Oh,
have to have.
exactly. Yeah. Yeah. I have a small, we just took a course on stock and automatic market stuff. I have a small portfolio. I don't even have time to look at it every day, right? If my life depended on it, it's not good, right? But for real estate, it's really good. And of course, it provides very strong base of your net worth, right? And it just keeps multiplying and you get leverage and take the money out. And it doesn't even have to be only a bunch of condos or high rise or multifamily unit to take advantage of it. I remember in the mid 2000s when there was a rise, we paid off our house and we took a new mortgage from paid off to a new mortgage. It's called the Smith maneuver, and we'll go into the Smith maneuver, right? And from there, we paid off all the other debts, and then we invested in a REIT actually, right? This is another way to participate in the real estate indirect ways, right? A very successful REIT in Canada. And it's still like this, like 15, 18 years later, we still have very, very good benefit from that, right? So that's one small way, right? The other ways, of course, we built a big project, the wellness center, right? And of course, I told people I made a lot of people rich, right? Investors came in, they get the money out. But it's the fulfillment, right? This fulfillment that, hey, people who actually live there or work at a place that you're part of building, then you have that satisfaction that this is meaningful for a long time.
Yeah. And again, like that's would be another pathway if you want to talk about pathways for doctors is, owning your clinic premises. It's
Yeah.
like, and I think we've talked about that before. It doesn't need to be labored, but yeah, psychologically, there's something very powerful about the income coming in to your household as a real estate investor. And that can be through direct ownership or a limited partnership that's giving distributions out. But that's you start to look at that number rise, as the years go on, and your monthly income, your passive income starts to become substantial. And that's like I said, a real peace of mind. It has a real psychological effect.
And also, I think for some of us who are closer to retirement, right, for intergenerational wealth creation, right, real estate as a class definitely gives you a very unparalleled advantage.
Yeah.
Right. Of course, you have to structure that correctly, smartly, and whatnot. Right.
Yeah. So that's again another key component to this whole game. We always tend to focus on like, okay, what's a good market? What's a good asset class to be involved in? But the big one as well is how is this structured corporately? And there is a lot of tax planning that goes into executing these things properly to minimize the tax burden that you carry, but also your heirs carry as well. And that's again where you're having a great accountant and a great tax lawyer can be instrumental in these sorts of things.
Yeah. Mm-hmm.
And sorry, I was going to say, like, I mean, you did it so well. How did you find time to actually be successful in this space, right? That's one of the questions we wanted to cover tonight.
Yeah, and who has time? Nobody has time, right? Like everybody wants a piece of our life, right? So years ago, one of my mentors, he's a physician, was a physician. He's probably 90 years old now. I haven't seen him for a while. And he said, Wing, if you put away 8 to 12 hours a week and do something else, right? What if that could change your life? And this is like almost 30 years ago, where I still remember that. That's when you asked me, would you like to make 100% of one person or 1% of 100 people's effort, right? That the leveraging thing that just expanded my mind. It just had a mind explosion, right? And the decompression never went back, right? And so that's what I kept thinking. What can I spend a small amount of time to leverage, right? So persistent quality part-time effort to learn a new thing is like taking a new skill, learn a new language. Some people take an MBA degree, MPH degree. Some people study to be like one of my colleagues did a master's in dermatology while doing a full-time practice, right? There are people who want to do something else. And can you hive up just a fixed amount of time and effort and just keep at it, right? And I think that persistent quality part-time effort is what got me going from just learning about it and just committing to it. And it could be tens of thousands of dollars or hundred thousands or millions or double-digit $1 million projects. It's all done on this persistent part-time basis. And you just learn to leverage with other people's time, money, talent, right? We talk about all these at our master classes.
And like my wisdom but I think number one, you cannot underestimate the power of experience. Mm-hmm. So you need to read, study, begin to model this in your head, make concrete plans for it. But at some point you have to actually pull the trigger, take some risk, and go and do it. And then as you're going through the bumps that we went through, that every other real estate investor goes through, you're learning. The same thing occurs in the public markets. They're going up and down. You're getting burned if you're a self-directed investor, but you have to stay. You have to be in the market to actually learn. And so, yeah, at some point, it's that courageous first step out to invest, understanding that there's some risk there. The other big, wisdom from myself, and I think probably a lot of successful real estate investors will speak to this, is the power of mentorship, right? That you need to connect with other people in the space, whatever it is you're interested in doing. We do this in our clinical practices, but also realizing that like surrounding yourself with effective professionals who can guide you on this is important, right? Like I've learned so much from my accountant. I've learned so much from our outstanding tax lawyer, Jason Pisecki, who's on this show, about how to do things, right? And so, I mean, yes, you're paying these people, but you're learning from them, right? So that's how you look at it, is that you're getting service, right? But you're also learning in the process.
Correct. And we learn by mistakes, right? Of course, we're very mistake adverse in our profession, right? So, and you have your hard-earned money. Sometimes that fear makes you even more paralyzed.
But it's different, right? Like it's different in real estate. We have to be very risk averse and cautious. In medicine, that's the requirement. But here in business or real estate, you actually have to have some risk tolerance.
Yeah. And the best way to learn mistakes is somebody else's mistakes.
Without question. Mentors.
And that's why by being in the group, not just reading about a book, there's no failures in a book, right? It's just a theory. But when you join a group or talk to people, right, and learn from the small and big mishaps, right? And that's how you get smarter, right? And I think the biggest part of a successful real estate investment career is know how to do due diligence, the deals that you do and the deals you don't do, right? I think we were going to someday do a talk about the deals that we don't do.
And why you didn't do a deal, or why it looked so great except for this one issue.
Exactly.
Right. And like look over deals. That's a key part to this. And again, I mean, lots of people teach this. We teach this. It's called due diligence, and it's important to be able to look. It's, like reviewing a journal article. You have to be able to understand some of the fundamentals, right? Yeah. I actually have to step off. Speaking of living my best life, I got a little girl to get off to soccer. You guys have a wonderful evening. Questions at the end. And I'm going to let Wing wrap up what has been a really, really great talk on such an important topic to all of us.
Yeah. So thank you, Kevin. And yes, of course, we are here to empower everyone for peer-to-peer empowerment, right? That's why Physician Empowerment, or our empowerment brand, is here to empower people. And so what we would like to do is to have everybody have a shot at, maybe this is the first time you learn about this asset, or maybe you are a semi-pro at this, right? So we would love to walk alongside you, right? And a couple of weeks, we're going to have a masterclass, and then we're going to have some formal deep dive on some of the pathways, right? And then we'll, in this fiscal year, academic year, we're going to focus a little bit more on the real estate, other than the regular ones that we talk about, like tax planning, corporate structuring, playing defense and offense in your wealth planning. Okay, all right. So I'm going to talk to you guys next time, and we'll end the official recording now.
Thank you so much for listening to the Physician Empowerment Podcast. If you're ready to take those next steps in transforming your practice, finances, or personal well-being, then come and join us at phys-empowerment.ca, PHYS empowerment.ca, to learn more about how we can help. If today's episode resonated with you, I'd really appreciate it if you would share our podcast with a colleague or friend, and head over to Apple Podcasts to give us a 5-star rating and review. If you've got feedback, questions, or suggestions for future episode topics, we'd love to hear from you. If you want to join us and be interviewed and share some of your story, we'd absolutely love that as well. Please send me an email at kmilo@fizempowerment.ca. Thank you again for listening. Bye.